Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute coming to you after the close, coming to you after a little bit of selling into that close after the Fed minutes. So let's get to it. Now, the S&P did take out that 43.95 area. There's a little bit of a gap there, and the selling kicked in a little bit farther into the close, and we're nearing what was a previous low of early August, 43.65, and a gap at 43.59. That is a big level of support. We had that as rare major four-star support. The market's moving into there. You also the 50-day moving average. It's slowly grinding higher, about 43.35 today, I think it was. And the market has responded time and time again against this 50-day moving average over the last year. On top of that, you also have the trend line from May that's now slowly aligning with 43.59. So a big area of support, that rare major four-star level, and then you have the rising 50-day moving average and trend line there aligning with that. We break below there, things you're going to see the selling pick up. And again, we still think this is, even if we go down to 4200, it's a very healthy pullback. I'm not saying that it's going to have to happen, but if we break below that support I'm talking about, we could see the selling kick in. And now the NASDAQ as well closed below major three-star support about 14,850. And on the Morning Express, we have a number of levels to take a look at, but you do have recent lows that are just 14,800. So there's a lot of support here. Take a look at the Morning Express. It's there. Now, the S&P wasn't the only thing to finish on the lows. Also, the crude oil did too. Broke below 65 bucks. And we've been talking about crude. We like crude the second half of the year. We think the growth story is there. And we like the fact that OPEC did not respond to White House's call to raise production. We also see Iran kicking in uranium enrichment. So crude oil, it didn't, today's inventory report was actually fairly upbeat, but the market didn't respond. And that really paved the way for additional weakness late in the day. But you have a 63 bucks is an area to lean on. The rising 200-day moving average, around 60 bucks. So there's a lot of support in here. And we think when crude bounces, it's going to bounce very sharply, like we have seen previously. But right now, you have to worry about a broader risk-off move, and that's what we're seeing. Now, with gold and the metals, it's really about the dollar. And what we've seen here was a little bit of whipsaw on the dollar. It was the Fed minutes that triggered the selling across equities, crude, and their minutes, some could say it wasn't as hawkish as anticipated. But remember, you go back to the meeting itself, the dollar sold off a bit, gold responded, gold traded higher, silver traded higher, the equity markets moved higher at the end of the day. The market thought that the meeting was more dovish than anticipated. Now, the minutes, it's a matter of digesting the minutes with that new July-August non-farm payroll report from earlier this month, because the meeting was before that, and now they've come off as a little more hawkish. And on top of that, it was just that slow, low volume grind higher in equities that was just gave way. The S&P gained about 0.5% total last week, and it was 4 straight record closes. So back to gold. Gold very quiet on the session. It's really going to matter here how Asia treats it. You have a lot going on geopolitically out there. As I mentioned with crude oil, Iran back in the news. What's going on with China? You're seeing a lot out there with gold. We would like to see gold lower as a buying opportunity. 1750 could be an area. We think silver, platinum, copper obviously much weaker. The sort of slower growth from a higher level right now is weighing on the metals. Dollar strength is weighing on the metals. And then obviously the rising rates. Rates did not slip much. Really maybe just very slightly a basis point or two into the close upon the equity weakness. So if rates stay buoyant and the dollar breaks out above 93.30, 93.40, it's going to put a lot of pressure on the metals. So keep an eye on that. See how Asia trades. Our trade desk will be here. Shoot us an email if you have any questions tonight and things going on. info@bluelinefutures.com. But our trade desk will be here tomorrow. Give us a call, 312-278-0500. Remember though, futures trading involves substantial risk of loss and is not suitable for all investors.